Well, apparently that labor market does not seem to be on steady ground. We got three reports yesterday that indicated, hey, that labor market is looking to struggle as we come into 2026. And as I said earlier in the week, make sure you float. And what do we need? We needed the labor market to pull back if we wanted to see better interest rates. And that's exactly what we got. Yesterday, we saw that 10-year Treasury tumble. Today, it's up to 4.2%. The reason that is the Dow finished up 1,200 points today. So what you saw is you just saw a shift of money. That's all you saw today. The mortgage-backed security market did fantastic today. So if you like that interest rate today, you might want to consider locking that in just because next week we have a big week. Given that we didn't get non-farm payrolls on Friday, now it's coming out on Wednesday. We're going to get another report of initial jobless claims, and then we're going to get some inflationary numbers with CPI on Friday. So next week could potentially be a big market mover. Do I think it can move in our favor? I do, but I also think a roller coaster is what we're going to ride here towards the beginning of this year. And then as we come to the end of Q2, we're going to have a new Fed chairman. And I believe Q3, beginning of Q4 is going to be the sweet spot. I've talked about it before. So who am I? My name is Kevin Weemark, AKA the Mortgage Mouth. Come to you every day with the daily dose. Again, to just go back. The beginning of this week looked really bleak for interest rates. But what did I say? Hold on, float that out. We are now back to 2-week lows. So if you like these rates, I would highly suggest you take advantage of them. Next week could be a little bit more of a roller coaster until we see significant labor market struggles with the big numbers. I'm talking non-farm payrolls. So if we do get that, we will see rates come down significantly. But should that number come in right at par, and then on Friday we get CPI showing that inflation continues to pull back, we could see a slight improvement to interest rates, but it's minimal. And that's why you need to know about yield spread. If you're not being talked about that with your mortgage professional, then please give me a call so I can help you make the best financial decisions possible for you and your family. Because without that knowledge, all you're doing is calling and asking for an interest rate. So make sure that you educate yourself. That's the best thing that you can do. All right, y'all. Happy Friday. I work all the damn time. So if you need something, please don't hesitate to reach out. I'll be coming to you next week. Hit that subscription button. Cheers.